today we're not just scratching the surface. We're really digging into some pretty specific market analysis.
That's right. We're trying to extract the key knowledge, the stuff that really matters.
And our mission today, to get a clearer handle on potential trend shifts for three huge tech names: Nvidia, Microsoft, and Netflix.
Yep, and we're doing this by looking at the work of André Cardoso. He's a technical analyst, and he specializes in something called advanced harmonic analysis.
Harmonic analysis.
Okay, think of it as using math, really, mathematical patterns in market movements to spot potential turning points, high probability ones.
Gotcha. So whether you're tracking these stocks for work, maybe for your own investments, or honestly just trying to understand what drives the market, yeah, this should give you a pretty unique angle.
Exactly, and a different perspective on what might be next for these big tech players. Okay, let's dive in. These harmonic patterns, what are they really?
Okay, so at their core, they're quantitative tools. Part of technical analysis?
They aren't just, random shapes someone sees. They're very specific geometric price structures. And the key is they line up with Fibonacci ratios.
Ah, Fibonacci. I've heard of that sequence, the numbers that appear in nature and things.
Exactly. That's the one. 1, 1, 2, 3, 5, 8. And the ratios derive from it, like 61.8%, 38.2%. The theory is that markets, because they're driven by, us, human psychology, they also tend to move in ways that reflect these kinds of natural proportions. Swings up, swings down.
So spotting these patterns helps identify where the trend might actually change direction.
That's the idea. It's like the market has this sort of hidden mathematical pulse.
And these patterns are like recognizing a change in that pulse. How do you physically spot one?
Well, it involves carefully measuring the different price swings, we call them legs, against very specific Fibonacci levels, both retracements, like pulling back partway, and extensions, where the price pushes beyond a previous point. We're talking levels like 38.2%, 61.8%, maybe even 161.8%.
Right.
Now, when several of these Fibonacci calculations, taken from different legs of the pattern, all point to the same price area.
Ah, okay.
That specific price area is what we call the potential reversal zone, the PRZ.
PRZ, got it. Potential reversal zone.
Yeah. And the more levels that converge there, the higher the probability, theoretically, that the trend will actually reverse in that zone.
Yeah.
It's like having multiple road signs all pointing the same way.
Makes sense. Multiple confirmations. So, André Cardoso's work, how does his expertise fit in? He's not just spotting any old pattern, I assume.
Oh, definitely not. He's very focused on harmonics, but he doesn't use them in a vacuum. That's key.
Okay.
He integrates them with other technical tools. Things like classic chart patterns, head and shoulders, triangles.
The standard stuff.
Right, plus candlestick patterns, even Elliott wave theory. It's a layered approach. He's looking for agreement, for multiple signals telling the same story.
So it's about building confidence. If different tools point to the same reversal area.
Precisely. And Cardoso emphasizes a structured approach. Very precise. He uses multi-time frame analysis, looking at daily charts, weekly, even monthly.
Ah, zooming in and out.
Exactly. To really hone in on those potential reversal price levels, he aims for high precision, not just somewhere around here.
And this leads to actionable ideas, like trade setups.
Yeah, often. We've seen examples where his analysis includes specific entry points, profit targets, usually based on other Fibonacci levels, and crucially, defined stop-loss levels. Risk management is built in.
That's really important. Now, I heard he actually worked in the tech sector himself. Does that background give him a different lens on these stocks?
I think it does, yeah. He spent nearly 15 years in tech. So understanding the business drivers, the growth cycles, it probably gives him a better gut feel for when a tech trend might be getting exhausted.
Trend exhaustion.
Yeah, that's his term. So it's not just the charts. It's blending that technical precision with an understanding of the underlying sector dynamics. It makes his approach quite practical.
Okay, fascinating. So let's get specific. We're talking about potential downtrend reversals today. So bearish patterns, what do they look like?
Generally, yeah, bearish harmonic patterns often form these sort of W-like shapes. You see them appearing near the peak of an uptrend.
A W shape at the top?
Kind of.
Yeah.
But the absolute key is that the ratios between the different points, the different legs of that W, have to match those specific Fibonacci numbers we talked about. Very precisely.
If the measurements are off, the pattern's invalid.
Exactly. Doesn't count. So today we're focusing on 3 specific bearish patterns he uses.
All right. Let's start with the first one, the bearish crab. And you mentioned Nvidia is the focus stock here. What's the defining feature?
The crab is known for an extreme final price move. It often signals major market highs.
Extreme. Okay, how does it form?
So you get an initial drop, that's the XA leg, then a recovery, the AB leg, which usually retraces between, say, 38.2% and 61.8% of that first drop. Then a smaller dip, BC. And here's the kicker, the CD leg. It's a very sharp rally that extends way beyond the start, typically 2.618 to 3.618 times the length of that little BC leg.
Wow, that's a huge extension.
It is. And crucially, the top of that CD leg, the D point, also hits a 1.618 extension of the very first XA drop.
So two big Fibonacci extension levels meeting at the same point.
Exactly. That convergence defines the PRZ, the D point. For a stock like Nvidia, seeing this would imply a really powerful, perhaps unsustainable final surge, maybe driven by, latecomers, FOMO.
Fear of missing out, yeah.
Right. And the expectation after hitting that D point PRZ, a strong, sharp reversal downwards. Because it's such an extreme pattern, traders often place a tight stop loss just above that D point.
Right, protect yourself if that final surge just keeps going. Okay, that makes sense for a stock with huge momentum like Nvidia. What about Microsoft? The pattern there is the bearish Altbat. How's that different?
The Altbat is seen as a refinement of the older bat pattern. It's known for being quite precise in identifying those PRZs.
More precise, okay.
It still looks roughly like a W, but the ratios are different. Starts with a downward XA leg, but the B point retracement is shallower, only up to 38.2% of XA, or even less.
Shallower bounce back initially.
Yeah. Then the price moves up towards a D point. The CD leg projects usually between 2.0 and 3.618 times the BC leg. And the critical D point itself, it's defined by a 1.13 extension of the original XA leg.
1.13 XA, that's very specific.
It is. And often there's also a relationship where the CD leg is an extended version of the AB leg, maybe around 1.618 times AB.
So multiple specific ratios defining that D point again.
Exactly. The convergence of the 1.30 XA and the BC projection creates that PRZ. For Microsoft, this might signal a reversal point, even if the bigger trend is still up, especially if it forms near a known resistance level.
So maybe more of a pullback signal than a full trend change for MSFT.
Potentially, yeah. Given Microsoft's underlying strength, it suggests a possible short-term overextension. Traders look for confirmation at the PRZ before considering a short, again with the stop loss just above D.
Okay, precision is the theme there. Now, Netflix. The pattern is the bearish shark. That sounds different.
It is a bit different. It's a newer pattern, often used for identifying reversals after moves that seem overextended.
Like Netflix's recent run, maybe?
Could be relevant, yeah. The structure isn't a classic W or M. It uses different labels. It signals that the buyers who push it up that far might just be exhausted. It often happens after a rapid, steep climb.
So the shark pattern suggests that sharp ascent might be unsustainable.
That's the implication. The primary movers are tired out. A significant downward reversal is expected from that D point PRZ.
Does it trade differently?
Often requires more active management, yeah. Things can move fast after a shark completes. You definitely need a bearish trigger at that C point before entering short, and the stop loss goes just above the high of that PRZ.
Okay, 3 distinct patterns, 3 tech giants. Let's apply them. Nvidia and the bearish crab. What's the current context? It's been on a tear.
Incredible momentum, absolutely. Late May 2025, it's all about data center growth, AI chips, huge revenues, strong guidance. The stock's rallied, 27% recently?
Something like that. But there are valuation concerns, right? Trading quite high compared to industry averages.
Exactly. Forward price to sales is pretty stretched. Technically, it's been in a bit of a range on the weekly chart, maybe consolidating. So the bearish crab isn't formed yet. It's a potential scenario.
Okay.
It would require another very strong push higher, hitting those extreme 1.618 XA and 2.618, 3.618 BC extensions we talked about.
So the PRZ would be significantly higher than current levels.
Significantly. If it formed, it would scream unsustainable peak, suggesting that even with great fundamentals, the price got ahead of itself and a sharp, significant correction could follow, like a rubber band snapping.
Got it. A warning sign of potential exhaustion, even if the story is good.
Precisely. It's a technical signal about price action potentially hitting a limit.
Okay. Microsoft and the bearish Altbat. What's the picture there? Still looking strong fundamentally.
Very strong. AI, cloud growth, huge investments, stocks near resistance, above key moving averages. Canalist targets are mostly pointing higher. Closed around $460 recently, end of May 2025.
But maybe getting a bit overheated short term.
That's where the Altbat could come in. The RSI, the Relative Strength Index, is getting up there, near 70, which sometimes signals overbought conditions.
Okay.
So if MSFT pushes up a bit more, maybe tests that resistance and forms that Altbat pattern shallow B-point dip, then the rally to the D-point, defined by that 1.13 XA extension.
It would create a potential reversal zone just above current highs.
Exactly. A strong potential resistance area. Again, not necessarily forecasting a crash, but suggesting a short-term overextension.
So more of a tactical pullback opportunity within the bigger uptrend.
That's a likely interpretation for a stock like Microsoft. You'd wait for confirmation that the PRZ signs the price is actually turning down before considering a short trade, with that stop loss above the D-point high.
Makes sense. Finally, Netflix and the bearish shark, you mentioned it's a strong run and also a potential warning sign.
Yeah, Netflix has been climbing nicely in a trend channel. Good revenue growth, positive outlook on ads, trading around, what, $11.85 lately? Analysts have pretty high target, but we're seeing something called negative RSI divergence. The price is making new highs, but the RSI indicator isn't confirming them. It's lagging behind.
Ah, a potential sign of weakening momentum.
Exactly. It hints that the underlying buying pressure might be fading, even as the price inches up. So the bearish shark, which catches those overextended moves,
Seems relevant here.
it does. A sign that this rapid ascent, maybe fueled by momentum chasers, isn't sustainable. The pattern would anticipate a significant move back down.
And requires active management, you said.
Yeah, because those reversals can be quick. Look for the bearish trigger, manage the trade actively, stop loss above the PRZ high.
It's really fascinating how these patterns try to map out that market psychology. But okay, we can't just look at these three stocks alone, right? What about the wire market, the NASDAQ?
Transform your trading with Forex Analytics' new platform. Introducing the complete market analysis platform, precision analysis, real-time insights. Subscribe today and save 40% on monthly subscriptions. Join us now and elevate your trading strategy.
Sector.
Absolutely critical context. You need to see the bigger picture. If these leaders falter, it could definitely put a damper on tech sentiment overall. Could trigger some risk-off moves, maybe a broader correction in the NASDAQ and XLK.
The cascade effect.
Potentially. Technical exhaustion in the generals can definitely impact the troops, especially if there are other macro worries floating around. But you have those strong underlying fundamentals, especially the AI investment narrative, driving companies like Microsoft and also benefiting Nvidia through customers like Meta. That could cushion the blow, maybe prevent a really deep, prolonged downturn.
So with this tension again, short-term technical warnings versus long-term fundamental strength?
Precisely. It creates a nuanced environment, makes tactical tools like Harmonics potentially valuable for navigating short-term swings while you still keep that strategic long-term view.
This is incredibly helpful context. Okay, let's distill this down. For listeners, what are the key strategic takeaways if they're looking at these potential reversals?
Confirmation. Harmonic patterns aim for precision, but they aren't crystal balls. They can fail.
Indicators too. RSI, SED.
Check them. Are they rolling over? Are they showing divergence where price makes a new high but the indicator doesn't? Divergence is a powerful corroborating signal.
And looking at different time frames.
Always helpful. Does the daily chart pattern align with resistance on the weekly chart? Seeing the signal confirmed on multiple time frames adds a lot of robustness.
Okay, confirmation first. Then what about actually placing a trade? Entry and exit.
Precision matters here too. You generally want to enter short after the pattern completes and you get that bearish trigger or confirmation signal within the PRZ. Avoid trying to guess the exact top.
And getting out? Taking profits?
Fibonacci levels are often used here too, but this time as retracement targets of the pattern itself, or maybe specific legs, like aiming for the 38.2% or 61.8% retracement of the move into the PRZ. Scaling out, taking partial profits at different targets can be a smart way to lock in gains.
Good tip. And of course, risk management. Stop losses.
Non-negotiable. Especially with patterns that identify potential pops, which can sometimes overshoot. Your stop loss goes just outside the pattern's extreme point.
So just above the D point for the crab and all that.
Right, and just above the C point for the shark. If the price breaks decisively above that level, the pattern is considered invalid, and the stop loss gets you out with a limited predefined loss.
What about position sizing? How much to risk?
Keep it sensible, especially when starting out or in volatile markets. Risking only a small percentage of your trading capital, say 0.5% or 1% per trade, is common practice.
And diversification, hedging.
Good points. Don't put all your eggs in one basket, obviously. Diversification helps smooth out bumps. And if you are concerned about a potential downturn in these specific stocks or the tech sector, you could look at hedging strategies.
Like options.
Yeah, buying put options on the individual stocks or maybe on an index like the NASDAQ or an ETF like XLK. Bear put spreads can lower the cost but also limit the protection. Keeping an eye on market volatility, like the VIX index, helps gauge when hedging might be more necessary and how much options might cost.
It sounds like this takes real patience and discipline. It's not a get-rich-quick scheme.
Oh, definitely not. Mastering harmonic trading, like any advanced technique, takes time, practice, study. These patterns don't form every day, so you need patience to wait for high-quality setups.
And controlling emotions, fear and greed.
Huge factor. You need to stick to your trading plan, your entry rules, your stop loss, your profit targets, and not let emotions dictate your actions. Adhere to your system.
And finally, we should probably just state the obvious. These patterns aren't foolproof, right? There are limitations.
Absolutely. There can be some subjectivity in identifying them, though Cardoso's method aims for precision. False signals definitely happen, hence the need for confirmation and stops. And yes, they are more complex than basic trend lines. You need a solid grasp of Fibonacci principles.
Okay, let's try and wrap this up. What are the main takeaways from this deep dive?
So we've looked at how specific bearish harmonic patterns, the crab, the Altbat, the shark, might be signaling potential downtrend reversals in Nvidia, Microsoft, and Netflix based on André Cardoso's technical analysis approach.
An approach that really emphasizes precision using Fibonacci and geometry to find these potential reversal zones.
Exactly. High probability zones where trends might shift.
But, and it's a big but, these technical signals don't exist in a bubble.
Not at all. You absolutely have to view them within the wider context market sentiment, the underlying strength or weakness of the companies themselves.
And for anyone considering trading these, the mantra is confirmation, precise execution, and solid risk management.
Couldn't say it better. Wait for proof, plan your trade, protect your capital.
All right, so here's a final thought to leave you with. We've seen these potential technical warning signs flashing for some of tech's biggest stars, right alongside a pretty complex, broader market picture. What might this confluence tell us about where we are in the current cycle of tech innovation and investment? And if these short-term reversals do play out, what could the longer-term ripple effects be for today's market darlings? Definitely something to chew on.
Food for thought indeed.
Thanks for joining us.